Hello and welcome to the Alt Asset Allocation Podcast. Today's interview is with Edmund Lowell, who is the founder and CEO of KYC Chain, an advisor to SelfKey, an angel investor and managing partner of Far Horizon Capital Inc., which is the company behind flagtheory.com. Flagtheory.com, I love it. You go to the website and it says legal methods to optimize and protect your business, increase your bottom line, and achieve more freedom. What is flag theory? We'll go into this in much more detail, but these flags include having a second passport, second tax residency, offshore entity, offshore bank account, offshore assets like gold or land, digital security, and cryptocurrency. These are the 7 flags. This conversation is very lengthy, and although these are personalized topics, we go over them and in quite a bit of detail, and as well as a little bit on China and DeFi, decentralized finance, what's happening there. Before you listen, please don't forget to like or subscribe to the podcast. It really, really helps, and I really appreciate it. Flag theory. There's a lot here. Please enjoy and check it out. Please enjoy this conversation with Edmund Lowell. Welcome, Edmund. Welcome to the Alt Asset Allocation Podcast.
Thank you for having me, Ben. Excited to be here.
Good to see you. And you're sitting in Chiang Mai, Thailand. So we have a drastic time difference right now.
We do, yeah. It's thank you for joining me so late in your night. It's nice of you to accommodate me.
No worries. If I was on the East Coast, it'd be even worse. How's everything looking up there in Chiang Mai in Thailand right now? So this is being recorded in August. It's still kind of in the middle of COVID worries.
Yeah, so COVID is actually seems to be being handled pretty well by the Thai government and the authorities here. So the cases are down. They're letting people back in if they're on a business visa or they're a elite visa holder. They do have to go through in a quarantine for 14 days in what they call an alternative state, which is basically a hotel in Bangkok. They can't leave for 2 weeks. But other than that, the doors are open, which is pretty amazing and not something that a lot of countries can say right now.
Yeah, for sure. For sure. Well, I've been looking forward to this conversation. So, I mean, we've played in the same kind of fields for a number of years, but I originally came across you from flagtheory.com. So we'll dive into this as well as wherever this conversation goes. But wanted to start off just a little bit of your background and how you got interested in this sort of thing.
Yeah. So for me, it really, my professional career started in college. I went to University of Northeastern, where you go on a co-op while you're in school. And for most of my life, I thought that I was going to be a defense attorney. I saw Law and Order on TV. That looked really attractive to me. And at Northeastern, I'm very grateful that I got to actually work in a court. And I remember sitting in a trial one day, and this lady was on there for ridiculous charges. She was looking at serious time in jail, and she had young kids. And her defense attorney, who was actually just a public defender, got her off scot-free, off of some technicality. And she gets up, the defendant, and walks out, doesn't even say thank you to her lawyer. And there was this moment where the judge, the prosecution, and the defense lawyer looked at each other and were just like, man, what did we accomplish here today? Nothing. And I just felt like from that moment forward, I didn't want to be a lawyer anymore. Like, it was very clear, cut and dry. So from then on, I was like, all right, what do I do next? And I had a friend who was selling real estate at the time. So I became a licensed real estate broker. I started selling real estate. But in many ways, I didn't have great timing then, because I got into it around 07, 08. And that was the real estate market collapsed. So,
well, great timing if you had a ton of capital just to buy up everything shortly thereafter, right?
True. But I was a college student with not many assets to my name at the time. And really had to take a deep look at, all right, what am I good at this point in my life, and what can I do from here? And I'd always been really interested in entrepreneurship, and I knew how to set up companies. I knew how to file paperwork with the state because I've been working with some real estate investors. So that's what I started doing. I started filing legal entities, setting them up, and that's really what flag theory eventually grew out of. So I started off just routine Delaware, Wyoming LLC. We would help you get a bank account. And then when I moved overseas, I was going to go to law school, but decided, all right, well, I better defer this at least for a year and see what else I can do. And I'm glad that I did that. And that year has really turned into, boy, at this point, almost a decade. and I moved overseas, and that's when I started doing more overseas incorporations, Hong Kong, Singapore, offshore, helping people get bank accounts set up, as well as thinking about where are you resident, where are you citizen, and how does that impact your freedom, your taxes? How do you maintain an efficient structure for yourself personally, but do it in a legal way? So yeah, that's kind of how flag theory started. And from there, over a course of a period of years, recognized that although we were setting up these entities, the kind of breaking point, or the point that the limiting factor in our growth, was doing KYC. So KYC is this document collection process where you have to collect all these documents from your client to send it over to the bank. You have to do the checks, and then the bank turns around and does the same checks. It can sometimes take months. The client's like, what are you doing? Like, I paid you a long time ago. Why don't I have a bank account yet? And it's like, well, it's not me, man. Like, it's KYC. It's the bank. And was looking for solutions to that, trying to find any software that was on the market. Didn't really find anything that was serving our niche, and started to build a software company that turned into KYC Chain at that point. So we went through a couple of different accelerators, went through 4 different accelerators with KYC Chain. We worked with Standard Chartered Bank to really get our product into the market. And from there, we sort of had a breakthrough in around 2017 where we realized that, okay, even though we'd created an efficiency for the bank, we hadn't returned a lot of value to the individual. They were still having to go through this whole KYC process over and over again. And that's how SelfKey was born, the project that I spend the most of my time on now. So that's kind of my story of the past decade, and condensed down into a minute or so. So yeah, happy to get into it further.
Yeah, there's a bunch there. 4 accelerators, that's insane. I mean, no major pivots, still the original vision from the beginning within all of those accelerations.
Well, I don't know if I can say that. I'd say there was a few pivots, but
Slight pivots, but yeah.
yeah,
Not
it
that
was
many
nice.
about faces, I suppose.
Those accelerators didn't take equity, which was really, really nice. I don't think we could have done 4 accelerators if they were all taking
Right.
7% or whatever Y Combinator takes. It's kind of like the gold standard. These were, Supercharger was a corporate kind of run VC. Then we went through Digital Ventures, which was run by Siam Commercial Bank, which is the largest bank in Thailand. We went through Accenture FinTech Lab, which is, of course, another corporate. And then also Cyberport, which is an incubator based out of Hong Kong, which is really a government kind of run. It's not government officially, but it's sort of public-private partnership type of thing. So yeah, that was where we cut our teeth in those accelerators and really honed the business model.
Oh yeah, they will do that. So I wanted to start the conversation with flag theory. So some of my listeners may be familiar, but for somebody that's not familiar with it, with flag theory, how do you introduce them? How do you explain it to somebody?
Yeah, so flag theory is a concept that's actually at this point over 50 years old. And then when it first arose, basically the person who came up with this concept said that you could plant these strategic flags in different countries around the world, and you could diversify your sovereign risk. So if you hold a passport only from one country, and you're a resident full-time in that country, and you've got a company in that country, you're really tied to the future of that country. You don't have a lot of optionality. And what flag theory sort of suggests is that if you were to set up your citizenship in one country, your residency in another country, your company in another country, you've achieved a level of diversification that makes you not reliant upon a single sovereign state. So that's kind of at a core concept what flag theory is about.
Yeah, and that makes a lot of sense. And for the average American or any other nationality, for that matter, a lot of people don't think about this, the amount of concentrated risk they have associated with that country in which they're residing, saving, investing, all of these things, right? So I think it's a really interesting concept to take a step back. We think about diversification all the time with our financial assets, but what about this sovereign risk? Albeit small for most countries, but it is a risk. So walk me through the different flags. There's 7 of them these days, right?
That's right. So the first flag is, where are you a citizen? And yeah, there's a big difference between American citizens and all the rest of the citizens of the world except for Eritrea, which is that if you're an American citizen, you have a worldwide tax obligation. So no matter where you live, you're going to at least report to the IRS and possibly owe some taxes. But there's an obligation there that's very clear. And the second flag, residency, if you're not an American citizen, then essentially you pay taxes where you're resident. I'm simplifying things here, but generally speaking, if you want to get into the exact details, you would look at the tax treaty of the country where you were previously a resident and where you're resident now. But generally speaking, if you're present in a country more than 183 days, you're resident for tax purposes in that country. So the third flag, which is where you have a company, is another interesting flag to consider on the basis of where you're resident. Because if you're resident in a country which has something called a controlled foreign corporation laws or CFC laws, you can't simply set up a flag in a country like BVI, British Virgin Islands, and expect to pay no tax. So it's very important to consider how these flags interact with each other. You can already see how where you're a citizen might impact where you pay taxes, where you're resident impacts where you pay taxes, where you have a company impacts where you pay taxes. And the fourth flag is where you have a bank account. So where you keep your financial assets is oftentimes something really important to consider as well. Because you don't necessarily need to have your bank account in the same country which you've set up a legal entity. So next flag is actually called playgrounds, is what it's kind of been considered, at least from the initial stages. We've kind of modified that to be more physical assets. So gold, land, things that are more difficult to move, right? They're going to be in a specific jurisdiction. Then you have information security, things like email, things like your servers. If you run an internet business, which country are those located in? That's going to actually make a huge difference if you get a subpoena and you have an anonymous server in Iceland, or you have something in the U.S. that can actually establish a nexus of your business if you have a server in a particular country. So it's worth considering. And then the last flag is digital assets. So this is kind of this new emerging asset class that I'm sure you've talked about on your podcast already, of digital currencies, cryptocurrencies, Bitcoin, Ethereum, etc. So yeah, those are the 7 flags as they stand today.
Awesome. Yeah, and each of these flags could be an entire separate podcast, book, course, everything on its own. So obviously we're touching very, very high level on all of these. Originally, there were like only 3, right? Like 50 years ago. I think it was passport, assets outside of your home country, and then maybe an address somewhere else or something, right? So this is expanded quite a bit. When you're suggesting that someone starts to look into this a little bit, what are the low-hanging fruit? What are the boil down, at least do this. This is the bare minimum you should do when thinking about flag theory.
Yeah, so I actually like to start at the end, which is the 7th flag, digital assets, because there's no minimum buy-in, right? If you're going to look to get a second passport, and that's really important to you, you're probably going to spend at least $100,000 up front. And that's if you want to make kind of the cheapest level donation, right? If you're looking to make an investment where you achieve some kind of interest or return, that could be $500,000, $1 million or more. Digital assets, on the other hand, are something that's outside of the borders of any nation state, especially if you're holding it in a non-custodial wallet. There's no minimum buy-in. You can buy 10 cents or $10 million worth of Bitcoin. It's kind of up to you. And this is something that's really a non-confiscatable wealth. It's very, very difficult to prove that someone has cryptocurrency. It's very difficult to prove that it's under their possession. I mean, you could cross a border with the seed phrase in your mind. You don't even have anything physically on you. And until governments can come up with some kind of mind reading device, probably it'll be difficult to prove that someone has digital assets. So I think that this is one of the best ways to diversify your sovereign risk, is to invest in cryptocurrency. You obviously have to be careful. There's risks involved, and this isn't financial advice. But if you're looking to get started and you don't have a ton of assets to your name, or just want to get something done relatively quickly without a ton of paperwork, I think that crypto is a great foot in the door to this space.
Yeah, that's a great answer. I mean, I completely agree. And that kind of kicks you down this rabbit hole of non-sovereign money and all of these other things that kind of peel back the remaining layers. So with a passport, I mean, I've spent the last 7 years abroad, and this is something that I was kind of grappling with, like, should I get another passport? I actually ended up even going to Turkey to look at real estate when the lira crashed by like 30% because it's 250K. You buy an apartment in a place like Istanbul that's been a center of the world for thousands of years. It's not going to go away. And you get this massive discount on real estate. And if you spend 250K, you get a Turkish passport. And it seemed all great on paper until I realized, like, what the heck am I going to do with a Turkish passport if I have an American passport? It was my inner Jason Bourne. I just wanted like to flip through the passports before I went traveling. But for an American or somebody with a stronger passport, what is the allure to get a second passport? Obviously, if you have um, a lower tier country passport, you would want a better one so you can ease travel restrictions or things like that. But what's the incentive for an American or a English, a British, or EU passport holder to want a second passport?
Yeah. So I think there's a few ways to answer that question. The first and foremost is that a passport is a privilege, but it's not a right. You cannot A state can cancel your passport. If you're American and, for instance, you owe more than $50,000 to the IRS, the Treasury Department can cancel your passport and you literally can't travel anymore. The only place you can go is back to the US, period. Now, if you sort of don't want to continue to have a debt to the US and have a tax obligation legally, the only way to rid yourself of that obligation is to either be dead or to have a second passport and to renounce your US citizenship. You actually don't need to have a second passport to renounce your US citizenship. You can become stateless, and people have done that, but it's really not advisable. I wouldn't advise for anyone to renounce their US citizenship and become stateless, because then you can't travel anywhere. Then you don't have the privilege to travel basically anywhere. So that would be a kind of tricky situation to find yourself
Indeed.
in. Edward Snowden comes to mind. And yeah, so I think that the sovereign risk thing is clearly there. If you're not Edward Snowden, then you might argue, well, heck, what am I ever going to do with this second passport? But the way that it's been explained to me, and the way that I like to think about it, is that it's just the best insurance policy that you can buy. No matter what happens in the world, you're going to be able to have this backup document that allows you to travel. And I think for a lot of people, that might be invaluable. And it's not something that you can sort of get once you're in a point where you need it, right? This has to be thought out in advance. It's like insurance. You can't buy it after the fact. So that's how I kind of think of it, is as the best second insurance policy.
Okay. But don't these governments these days talk to each other? So if my passport's canceled by the US government, but I have an English passport, don't they just communicate that? And they're like, hey, this guy's got a second passport. We can see it. Cancel that as well.
Fair point. There is, to my knowledge, there is no international database of individuals that any government can access at any point, right? Do governments share information with each other? Almost undoubtedly, right? But there's a lot of laws and regulation around this, and it's not something that's done haphazardly or done probably as much as people think. People, I think, have this view of government as these omnipresent entities, and in some ways they're correct, because they are siphoning a lot of data. They do have tremendous power, but I think we shouldn't overestimate the amount of power that actually they have. And I think in many ways, the people are more powerful than the government. The government should fear the people, at least in a country that's operating effectively. At least I would argue that. So yeah, back to your question. I don't think that they would automatically know that you have a second passport. There's many countries that don't allow for dual citizenship, right? But these citizens of these countries, in many cases, do have a second passport, continue their lives without having any difficulty. And although I'm not advising that, it's definitely something that's been done, and indeed done by some politicians and members of government, because they themselves know how powerful it is to have this kind of alternative travel document.
Yeah, and then obviously you have the benefit of feeling like Jason Bourne whenever you're traveling and choosing whichever one makes the most sense. So that's the first flag. The second flag, tax residency. So another more specific question here. Americans and people from Eritrea, which is a small country in Africa, we're taxed no matter where we are, or at least we have to report it. And I have a separate podcast all about FEIE and taking advantage of like the low-hanging fruit as an American abroad. But what what benefits for Americans to get have a tax residency somewhere else? Like, walk me through the thought process there.
Yeah. So I mean, there's two ways that you can qualify for FEIE, right? You can either qualify under the physical presence, where you're physically outside of the U.S. for 330 days per year, or you're a bona fide resident for tax purposes of another country. And there's all sorts of criteria that you would need to hit in order to get that. So you could potentially spend, now it depends, because the US runs their tax residency on sort of a 3-year rolling basis in some instances, and this is not tax advice, but it is possible that you could spend, say, 150 days in the US, and you could spend the majority of your time outside of the US as a tax resident somewhere else, and you wouldn't be, you would qualify for the foreign earned income exclusion. So that's one reason. But to be honest with you, I think that flag theory is ultimately the most useful to people who are not US citizens, because if they're able to be a tax resident in a country that doesn't have a lot of income taxes or corporate taxes, there's many tax havens around the world, Monaco, Cayman Islands, the list goes on. There's a lot. Then they could have a company set up abroad, and they could earn income into that company and essentially be have the lowest possible tax obligation that they could, and not be breaking any laws, which is really critical. They would be able to stand under a bright light, and if everything was kind of shined on them, they would be able to say, hey, I didn't do anything wrong here. Here's what I did exactly, and show me where I owe tax. And most likely they wouldn't.
Yeah, and I think the most surprising thing there is obviously like BVI and Caymans and all of these things, we all know that they're tax havens, but then you have places like Portugal with the non-NHR, non-habitual residency, and it's filled with people, British, who, stay there 183 days a year or whatever. They're tax residents, so they're not paying any taxes on all of their income back home. They can still spend a good portion of their time in the UK. It's interesting to see all of these popping up around the world. Obviously, I can't really as much take advantage of it as an American, but I do enjoy hearing these stories and hearing how people are playing within the rules and really taking advantage of these things. So the third and fourth, well, third would be offshore company. So what are some of the misunderstandings that you see most around this flag when people try to pursue it?
Yeah, so I sort of touched on this earlier, but let's say that you're an American living in New York City, and you think, I'm going to be clever and I'll set up a BVI entity and I'll never have to pay any tax, because I read it on some website that BVI has no tax, so I'll just set up a company there and I'll be scot-free. That's totally wrong. The US has many different laws surrounding that, one of which is, that I mentioned earlier, a CFC, a controlled foreign corporation law, where if you're controlling a corporation from inside the United States, in this example, and over 50% of the ownership of that company is American, by default it's designated as a CFC, then for sure that income would be taxable. And the laws around this change very frequently. The most recent change when Trump came into office was something called GILTI, where now you have kind of this obligation, if it's a CFC, to not be able to, you have an obligation with the CFC to pay taxes on a yearly basis based on the income that's sort of accrued. It used to be in the past, companies like Apple, Google would set up these complex structures and they would hold their profits offshore. The long short of it is that you can't really do that anymore. Without getting into the kind of the technical details, pretty much you're not going to get any benefit at all as an American living in the US owning an offshore company. So that's kind of one of the most common misconceptions that I see, is that people read on a website, oh, this is a tax-free entity. And in some cases it can well be, but it's much more complex than that. And you really have to dive into the unique situation of the individual.
Yeah, and that applies for all of this, right? I mean, it's tough to do broad brush strokes on all of these. It's very tailored to your individual circumstances, but also if it sounds too good to be true, it probably is. Like if you're reading it on a website, you're not the first person to think about doing it this method, and that loophole probably has been closed, which is always good to keep in mind. So the fourth flag is offshore bank account. Again, as an American, you have all of these what's the reporting that you have to report your bank accounts overseas, but a lot of foreign countries are not so willing to open accounts for Americans because of the additional paperwork that they then have to do. So what kind of steps do you recommend somebody looking to stake this flag, offshore bank accounts? Where to start, what to do?
Yeah, sure. So I think first you have to think about why would you want to do this, and the reason we touched on before was the sovereign risk. Country and its financial health is very much tied to the banking system, right? And if you have bad debts in a banking system, you can actually have a systemic collapse, like we almost saw in 2008. So I think that's become more well known, and there are hopefully more protections in place from that. We'll see the next time around. But you're essentially putting all of your eggs in one basket if you have your retirement accounts, your bank accounts, all of your material wealth stored within one state. And that state has a downturn economically, financially, you could potentially be dragged down with that. So I think that there is a strong and prudent reason to have bank accounts diversified in different jurisdictions. As you touched on earlier, if you are an American, you do have an obligation to report if the total across your accounts exceeds $10,000 in a given year. You have to file something called an F-bar to the Treasury Department. Actually, no, it's to FinCEN. You have to file it to FinCEN. So yeah, something to keep in mind. It's still perfectly legal. You can do it. You could have 100 bank accounts offshore, and you can report and file all of them and not be in any difficult situation. However, it's just something to bear in mind that you do need to do that on a yearly basis to report which bank accounts you hold if you're an American.
Yeah, and I mean the sovereign risk is it's not a zero risk. I mean, the people of Argentina when it had hyperinflation 2001, or Zimbabwe or Venezuela, like all of these people that had assets in banks, lost nearly everything. So um, I think the important thing probably here is not to diversify your risk as an American to the US dollar and US banking system and open a bank account in Cambodia. And actually, you're increasing your risk by putting assets there, perhaps, versus de-risking. So that's probably an important note. I mean, where do you recommend people start looking for their second bank account, assuming that you know, they've got their why hammered out?
Yeah, I mean, it depends on what you'd want to have exposure to from a currency perspective. Do you want to have dollars or euros or something else? There are certain jurisdictions around the world that make banking, I think, just a lot easier. My favorite place to bank is Singapore, just because they have a really advanced financial infrastructure. The country is really dependent on international trade and commerce. They'll never implement something like capital controls in Singapore. At least it would be devastating to their economy. And I think that the politicians in Singapore are smart enough not to do that. So you'd want to pick a country that doesn't have capital controls. Those countries that you mentioned earlier, Argentina, Venezuela, they do have capital controls, and it's very difficult to send money out from the country. So it's something where you'd have to have that bank account set up abroad, and then you need to have some source of income, maybe from your offshore company, paying into that account in order to actually even get money in, because it's just very challenging. Chinese citizens can only transfer abroad $50,000 per year. So even if they'd like to buy a lot of US real estate or open up a US bank account, they may find it challenging, depending where their assets are currently, to actually get that money into the United States, which has been very, very popular over the past few years. If you look at the real estate market in places like Vancouver, it's been notoriously almost driven purely by Chinese foreign investment. There's just been an unbelievable amount. And I'm not making a comment on whether that's good or bad. That's just how it is over the past decade. There's been an unbelievable amount of wealth that's moved into places like Vancouver, downtown Toronto. So yeah, not to pick on Canada. That's happened in a lot of places. But you have this kind of emerging.
Look at Thailand, right? I mean, it's
Sure.
very, very prevalent there as well.
Yep. Yeah, I mean, the real estate prices in Bangkok, in Hong Kong, in Manila, in Jakarta, in these first tier Asian cities has just gone, it's become really, really hot to the point where in many cases, the government has tried to introduce cooling measures to try to dampen what they might see as an asset bubble in those respective geographies. It's difficult though as a government, I think, to effectively manipulate the free market in that way. I'm not sure that always has the intended outcome.
No, most of the time it does not. Yeah, it's quite scary, and even the lower tier markets in Asia. I mean, you can just see the Chinese capital flowing in. You go to a place like Laos and these little towns and the gigantic developments and things that's all Chinese money, Chinese investment. So it's certainly, yeah, there's a good book, The 100-Year Marathon. I don't know if you read it, but it's about China. Just they're going to be the #1 superpower. It's all these little battles. They don't really matter. 4-year election cycles. They're eyes on the prize long term, right?
You're completely right. You're completely right. The way that look, I'm not an expert on China, but from my experience, the way that Chinese think about wealth and think about generational wealth is very, very different than the way that Americans think about wealth. And you know, this 4-year election cycles where two parties are kind of fighting to the death. Look at right now, it's kind of messy in the stateside. And you have China where, you know, you have a much longer vision and timeline for what the country is developing into. And I see it as almost inevitable that the US takes over, that China takes over the US as the world superpower. And I'm not alone in that thinking. You just said it. I think a lot of scholars have looked at that, and it's just sort of inevitable that it's going to happen.
Yeah, I mean, we're trapped in this short-termism, short-term thinking, managing companies to quarterly earnings reports, 4-year election cycles. It's just shrunk into this very near-term sort of thing. So if you have somebody else competing that's looking very long-term, you know, eventually they'll probably overtake you, which is the unfortunate reality.
That is the reality. I mean, China's really making a play with their Belt and Road and have been for a decade. It's not something new, but they've made inroads and built infrastructure in Africa, in South America. They're wielding a lot of soft power in the way that is different from the US. The US many times rules by diplomacy. You know, speak softly and carry a big stick has kind of been the motto of the US for a long time. Let's have the most powerful military in the world. Let's spend more than anybody else in the military. And China does have a powerful military, but they've taken a different tact, which is let's make loans to these developing nations. Let's build roads and airports and ports. And once we control the port, and once we control the roads, then you know we can control the trade. We can wield power within the government. There's probably a lot of other things that they're thinking of that I don't even know about because I don't think about that all day.
Dams, like water, all of these things. I mean, it's infrastructure plays, right? That's very, very insidious. Yeah, well, that was a sidebar. Yeah, China. It's center of my mind whenever I'm in Asia. It's just that once you see it, you can't. It's like the red convertible, right? Like you start noticing them everywhere.
Yeah, if you haven't been to China, like a listener on the call, it's just unbelievable to see how much of a different speed that everything works in China. I mean, I took a tour as part of one of these accelerators I mentioned earlier to WeBank, which is like the financial arm of this company, WeChat, which is actually just banned in the US. And I asked them, you know, how many engineers do you have here? And they're like, well, we've got like 600. And I was like, well, when did you guys start? And they're like, the beginning of the year. They just hired like 600 engineers. And it was like, you know, you don't see US companies in Silicon Valley moving that fast. It's just the pace and speed of change and innovation in China is really, really unbelievable. If you haven't seen it, it's tough to fathom.
Yeah, it's moving. So the last two flags, I want to cover those, and then I think when we talk about the final flag, digital assets, it will probably fit in with China and the things that are happening there as well. But the sixth flag is improving digital security. So this is information security, servers, things like this. Same question as before. What's kind of the low hanging fruit things to keep in mind with this flag in particular?
Sure. So let's talk about one that basically everyone on this listening to the show has is an email account, right? Do you have an email account with AOL from 1994, or do you have, a Proton Mail account? Both of which are free. One of which comes with encryption and the opportunity to use PGP, and the other one is kind of, storing your messages in a different manner, you might say, or allowing you to send and receive messages. And they don't kind of give you that encryption option. So I think that encryption is really, really powerful. It allows the little guy to have protection against the big guy, right? Like that's what encryption means to me. I think that that's something that's really, really cheap, really, really easy to get into. If you want to talk about kind of like next level stuff, you could talk about having a VPN, having a virtual private network so that your computer is encrypted. I mean, if you're walking around and accessing Wi-Fis that are open, you could be really easily subject to a man-in-the-middle attack where someone is posing as a server in open network and they're actually stealing all the data that's going through there and performing what's called a man-in-the-middle attack. A VPN can help protect you against that. Again, not very expensive and something that's pretty easy to do. And now you can make your IP address in your internet connection appear as if you're in a different country. So you could be in China and you can use a VPN and you could be accessing US Netflix, for instance. So there's there's kind of I think, good rationale and reason that you should use encrypted email and VPN as kind of a starter.
Yeah, and I'll link in the show notes, but privacytools.io is a fantastic resource for all of these things. So they go through different encrypted mails, like Proton Mail is a good one, and then ranking VPNs. So those are kind of the first ones you can do. I'm curious. Well, I'm curious on two things. One, had I sent you an email from an AOL or Hotmail email, would you have still sat down for an interview? Is the first question.
I think so. I mean, I consider email to be public record. I think if you send something over email, you should consider that basically a lot of different entities may have access to that now. That is not a private mode of communication. If it's encrypted, I think it's better, but I still think that you should treat email more or less like public record.
Absolutely. And even, I mean, even with encrypted emails, like these things just in my mind become a honeypot because it's like, okay, anything you want to be secret, you're going to use Proton Mail, which is the best known encrypted email. So obviously there's a huge incentive to figure out what the heck it is people are sending there, because it's probably more sensitive than normal email, right?
Yeah, it's possible. And it's also possible at some point in the future that encryption's broken. That does happen on regular intervals. Previously thought secure encryption mechanisms are proven to be insufficient given
Yeah,
breakthroughs in a computer.
absolutely. And as soon as we get quantum computing, it's all gone anyways, right?
Possibly. There are
So
some quantum resistant technologies, but yeah, that is kind of the end game.
yeah, I mean, we've got a lot of problems when that happens, I suppose. So the last flag is investing in digital assets, crypto. This is something like Bitcoin. This was also what you had mentioned, kind of low-hanging fruit, easy way to get into the flag theory methodology. What else do you want to add on this one?
Yeah, I mean, I would love to talk about, if we could, DeFi, because I think that that's kind of a really interesting development in the cryptocurrency space that's really recent and maybe an interesting investing opportunity depending on, kind of where you're at and who you are.
It is a very interesting investing opportunity, and I would love to talk about DeFi. So for my listeners, this in episode 1 with Alex Messmej, we talked about we peeled open Ethereum, which was a bold move for like my first episode, but we talked about NFTs, NFT collateralized loans, personal tokens, a little bit of DeFi, but DeFi is decentralized finance. And it has just exploded in this year, 2020. It's picking up steam last year. But yeah, what excites you most about this space, Edmund?
Yeah, to me, if you look at like the macro situation, right? In 2020, we're sitting in a time and age where you have government sovereign yields are very, very low, right? They're sub 1% and in some cases negative. So that's the backdrop for what you have to invest in terms of an option is either fixed income at kind of this sub 1 or negative interest rates. You have equities markets at a 20-year bull run up to this point. You're not buying the bottom. Like it looks pretty expensive, especially if you compare the GDP to the stock prices and the overall value of the market capitalization. It's kind of expensive. And so you have bonds and equities, which traditionally, a traditional portfolio is 60-40 bonds and equities, right? And that's it. And so I think for our generation, you kind of have to think, is that where I want to put my money? And maybe it might make sense to put some of it there, but as an alternative asset, we now have this new asset class in cryptocurrencies that has come out. And with DeFi, you have a way to even achieve yield on these cryptocurrencies, or if you're holding a stable coin, the stable coin. So I think of it almost as, do you want to earn less than 1% in a savings bond, or would you like to have 12% on a yearly basis on a stable coin? Now, there obviously are some, more risks in the 12%. It's not the US government backing it, but I'll take that 12% risk all day. I mean, that's a chunky interest rate, in my opinion, and I think worth investing in. And you can also maximize the yield on your say Bitcoin or Ethereum by putting that into a smart contract which can return yield. So now you have these DeFi smart contracts which are returning yield if you're contributing collateral. And so that's a really interesting way for either earning yield on your BTC or your ETH or alternative assets, or on your stable coin, which I think of kind of as two different things. But that's kind of like the big picture, and we can get into more details around that and what other people are doing with that.
Yeah, and perhaps, I mean, so zooming out a bit, where is this yield coming from? So the way that it works is I'm lending it to somebody who's borrowing it. So it's just leverage, but traditionally you would be doing this lending, borrowing through a bank, which is a centralized party. This has all been replaced by a smart contract. So I can simply lock in my collateral, and then somebody else can pull it out and do whatever it is they want to do with it. And they're paying into the protocol. I'm receiving the protocol in interest. They're borrowing percentage. So this is what enables this yield that's being earned on these assets, right?
Exactly. And as you pointed out, there's many times no intermediary, or at least it's been disintermediated so that the yield is returned to the investor as opposed to the middleman.
Right. So, I mean, obviously this is stacking risks on risks. You're already into this risky asset, and then you're lending it out through at times unaudited or audited, which means nothing, smart contract to these people. So that there are a number of risks, but the fact, like you said, I mean, you can get 10% yields on a stable coin. So you're not going to lose any FX. It's backed by $1. It stays at $1 rate, and you're getting 10-12%, which means, you double your money every 6 years, which is substantial versus negative rates.
Right. And that's with the stable coin. With Bitcoin, you're obviously taking the asset risk as well, because it's not locked against dollars. So you could have Bitcoin rise, or you could have it fall, depending on what the asset does in a given year. But you're just maximizing your yield in BTC terms. And I think, if you look at BTC against this macro backdrop of governments around the world are facing this pandemic and this crisis, and their response to it is let's print money. Let's turn on the printing press. In the US, it's trillions of dollars that they're printing in
And they're not going to
like a
shut it
very
off
short period.
anytime soon, ever,
Yeah.
probably.
Yeah. I mean, I think that it's pretty clear that, we're facing a deflationary environment, and they had to do something. And so printing presses is kind of like the obvious choice. I think I think it's clear that we will see inflation at some point. And this is something that our generation hasn't lived through, right? The last time that there was rampant inflation was the 1970s, right? So people don't have a memory of what an inflationary environment looks like. But imagine the dollars that you have in your bank account are becoming worth less and less and less. And I think that we're already seeing that in asset prices. It may not be in the consumer price index, where meat might not be more expensive. You might have the same grocery bill, but look at the NASDAQ. I mean, the NASDAQ is at an all-time high when the economy is at an all-time low. And that's driven by central bank intervention and money printing. And the best inflationary hedge, in my opinion, is either gold or Bitcoin, right? Cryptocurrencies and crypto assets. I'm not alone in this, right? Paul Tudor Jones came out this year and actually said that he thinks that Bitcoin might be the fastest horse that you could bet on in this inflationary environment. So I think that it's worth looking at. Obviously, you probably want to have an asset allocation where you're balanced and diversified across different asset classes. But I think for a lot of people, digital assets could be a component of an overall portfolio that returns asymmetric returns, uncorrelated returns. It's also not correlated to the S&P 500 or equities markets. It's not correlated to the economy. So you sort of have this really interesting asset class that's uncorrelated to other asset classes, which has not really happened in our lifetimes besides with cryptocurrency. So it's a very, very exciting time. And you do have to be careful. There are definitely risks. I think one thing with cryptocurrency that I've learned is that you need to have a very open mind to learn and to understand what these things are. But when you open your mind, you run the risk of dealing with people who are running scams or people who are charlatans. So you have to be both at the same time very open, but very guarded, which is kind of not an easy thing to do. You have to have a good nose for, is this bullshit? And is this, altcoin just a complete nonsensical project that's never going anywhere? Or is this actually backed by some kind of fundamentals that I think technically and logically make sense, like Bitcoin? There's only 21 million Bitcoin. There will only ever be 21 million Bitcoin. And in US dollar terms, there's a non-zero chance that will continue to rise in US dollar terms. As they print more money, the cost per Bitcoin in US dollar terms will likely go up. It's not guaranteed to go up. There's no fixed peg. But traditionally, if the historical track record of Bitcoin is any indication, it will continue to trend in this direction because there's a fixed deflationary supply as opposed to this inflationary government-created fiat currency.
Yeah, I mean, I completely agree with a lot of that, and that was what spawned this podcast, is looking for an allocation to alternatives outside of the public markets, because you're not getting any yield there. There's a number of really interesting asset classes, such as Bitcoin, such as gold, such as real estate. Talking about music royalties and all sorts of weird things that offer another alternative to your traditional 60-40 portfolio. My biggest fear with crypto, with Bitcoin, is that it just is another risk asset. Obviously, you have the risk of a catastrophic bug, or you find out that North Korea is behind its development and everything else, or something like that. But the risk that I see is that it's just another risk asset. It's displaying these sound money, hard money principles, characteristics, limited, algorithmically limited supply, all of these beautiful things. But ultimately, it just was born in 2008 into this financial crisis, and it's been a tremendous bull market, and it's been pumped up just like everything else, right? So that is always like one of my fears, that it's actually just a risk asset. It's not the new digital gold, uncorrelated asset.
I think that will change. So in March, we did see that Bitcoin behaved as a risk-on asset. So you're absolutely correct. And I think we have to look at that historical record. But moving forward, I don't see a reason that Bitcoin should be correlated to other markets, especially the equities market. I would challenge anyone to make the argument that Bitcoin is somehow correlated to the profit margin of Apple. It's just not related. They're completely separate. They're different things. They run on different things. However, in a liquidity crisis where liquidity dries up, you'll see everything sell off, including gold. Gold sold off in March, right? So it has performed as a risk asset during this last crisis. I actually will make the very bold prediction, where I'll probably be wrong because I'm predicting the future. I predict that at some point cryptocurrencies will not act as a risk-on asset. I don't know when, but I think that will change in the future. Speaking just briefly about another asset class that I think is underinvested is something called long volatility. I'm not sure if you've heard of this asset class.
Yeah.
I've been just geeking out on this asset class. The concept of like the dragon portfolio, as it's called, it's awesome. I love it. I think that it should have crypto in there. But I think this dragon portfolio is amazing. And the concept of long volatility, to me, is really, really interesting. I think it's unappealing to a lot of investors because basically you bleed. You have to pay this carry cost. And then when there's a spike in volatility, many times you're positioned through options and other financial instruments to profit from that volatility. That's generally how a lot of these long volatility funds are working. They do vary depending on kind of who you're talking to, Point 72 or Artemis. They have different strategies for trying to not hedge the market, but go long on volatility, which effectively acts as a hedge against equity markets. So yeah, I don't know how much you want to get into that, but that's a really interesting space as well. Not one that I'm involved in as an operator, but just as kind of a bystander and investor.
Interesting. No, I can link those things. I think it's a little bit outside of the scope of this conversation, but I would like to ask, I mean, you're keeping your finger on the pulse of the DeFi market and everything it's very fast-paced moving there, obviously. But what's exciting you right now in this space most? And it's late August 2020.
Gosh. Yeah, I mean, the big things that people are talking about are flash loans, it's yield farming, under collateralized loans. I mean, there's a bunch that's happening. It's really tough to keep up just because it's so fast moving. It really changes on almost a week-to-week basis what's going on in DeFi. But yeah, just to speak about one of them, yield farming is kind of an interesting one.
It's very interesting. It's
yeah,
wild.
So it's wild. I'm not sure. Yeah, I don't know if I want to recommend to anyone to get into yield farming, but definitely there's people making money yield farming right now.
Yeah, and then you end up with some token that's called a YAM token, and you have no idea how you got there, right?
Well, I kind of am annoyed with that project and that team because YAM tried to copy what other projects have done, and they tried to release the secondary governance token, but they didn't get their contract audited, which was just a huge no-no in the space. I mean, if you're releasing a contract on Ethereum mainnet that deals with people's money and you're not getting that audited first, you're really acting irresponsibly, in my opinion, very irresponsibly. So what happened was all these people put the money into the smart contract, and effectively the smart contract failed, and those people lost their money. They tried to invest in the new hot thing. They didn't do their due diligence, and the project owners didn't do their responsible actions like getting the project audited, and yeah, people lost some money. So that's an unfortunate and I would say bad example of how DeFi.
And this is one of the risks of these move fast and break things kind of projects, right? And this is there's a yield, which means there's a risk, and you're being compensated for this risk with some returns, which is the yield. So I mean, I think it's a great point to state with all of this. You're earning 10%, you're earning 0 in your bank, so obviously there's a little bit further out on the risk spectrum to get that 10%.
Oh, I would say so. Yeah, I mean, definitely. No risk, no reward, though. I mean, that's kind of what you're responsible for as a responsible investor. Effectively, what you're tasked with doing is managing risk. You could invest in sovereign bonds and have very low risk, but you also have very low returns. So it's like, what's
Probably
important to you?
negative.
Probably possibly negative. I mean, the way that I like to tell people about negative bonds, because I can't wrap my head around it. It's like, Ben, if I
None of us
offered you
can.
nobody says, if I offer you, a cheeseburger today, and then after 30 years, so you give me a cheeseburger today, and after 30 years, I give you 95% of a cheeseburger. Would you
A
take that offer?
cheeseburger with a bite out of it.
Yeah,
Thanks.
exactly.
Thanks for taking good care of it. Yeah,
That's not an
that's what
investment.
it is, right?
That's
Guaranteed
what it
loss of a 5% of that cheeseburger. Guaranteed.
right. And so who's buying that? Intelligent investors are not buying that. Okay, quite frankly, it's central banks who are buying their own bonds so that they can print more money, and then they buy more bonds so that they can print more money, and the cycle just perpetuates. I mean, this is something that's been called by economists quantitative easing, and now you even have things like MMT, modern monetary theory, which are even further out on the logic spectrum of like what could be considered a rational central bank intervention into an economy. So I just think that we sometimes give too much credit to economists and central banks to know that they're managing everything responsibly. I'm not sure that that's always the case. I think that there's oftentimes misaligned incentives, where the incentive to keep everything afloat now and to forego that with future debt, there's a very strong incentive for that, right? The
Oh yeah.
Keynesians have the famous quote, which is like, let's print the debt now, because on a long enough timeline, we're all dead anyway. So we're not going to have to pay it back. Our grandkids will pay it back. And I think that's a really dangerous mentality to have. But I think that's how the world is right now. Whether you look at governments or you look at corporates, the world is addicted to cheap money and cheap debt. But someday the piper will be paid. And I hope that you're holding on to long vol and gold and Bitcoin when that happens.
And land and guns and ammo, because that's about the only thing that would perform well in those situations, unfortunately.
Passport.
Yeah. Edmund, really appreciate you coming on today, spending the time talking through this. It was really, really helpful. This is an infinitely fascinating area, and you're an expert on all of these, so really appreciate it. Where would you like to leave my listeners? Where can they find out more about you, some of the projects you're working on? Where do you want to send them?
Yeah, sure. I mean, flagtheory.com is our website for Flag Theory. I'm not actively involved there, but we have a team there who work with clients day in and day out. And selfkey.org, if you're interested in having a non-custodial open source crypto wallet that's completely free to use. You can go to selfkey.org and you can download our wallet for iOS, Android, desktop, and start buying some crypto today. And yeah, I want to thank you, Ben. Thank you for asking such intelligent and articulate questions. This podcast has been a good opportunity, and I appreciate it.
Awesome. Hey, it was great to see you. Thanks for coming by, and stay safe up there in Chiang Mai.
Yeah, thanks for having me. All the best.
There you go. First off, thank you very much for listening all the way through. I hope you got a lot of value out of that conversation. As always, you can find show notes, links, and more at altassetallocation.com. Please share this with anyone you think might be interested and derive any value from this conversation. And as always, you can reach out to me for any feedback or questions. Please give the video a like, or even better, subscribe on YouTube or your podcast player of choice. This really helps others find the podcast or the video as well. Thanks a lot. Hope everybody has a fantastic day, and stay safe out there and invest wisely. Cheers.